Let's go to Shanghai. It's the latest city to enter COVID
The worsening
lockdown.
COVID-19 situation in China is further disrupting the construction.
Fueling concern about a possible recession.
China's economy is struggling under the COVID-19 pandemic, the worst global crisis in decades.
So the government will undoubtedly have to carry out some stimulus policies in order to be able to hit the 5.5 growth target.
Several high-level meetings in May focused on how to ensure economic growth.
I think with all the fiscal and monetary support, we are looking at about 35.5 trillion yuan of support all over this year.
So even though COVID-19 has not been absolutely eradicated, can China's economy go back to normal? China has set a 5.5% GDP growth target for this year. But can it make it? The debate continues. Monthly indicators show the world's second-largest economy is facing strong headwinds.
Internationally, we have the Russia war, and then the ripple effects from that, the energy and food crises, inflation, logistic and supply chain disruptions. We also see that central banks around the world have now started to, rate hikes. So all of these would create unfavorable conditions for China's economic growth this year. And domestically, the zero COVID policy is trying to protect people's lives, but it's very important that we have, balanced acts to support economy, to support people's livelihood.
So the government will undoubtedly have to carry out some stimulus policies in order to be able to hit the 5.5 growth target, as well as get COVID under control. And it can't control the external situation. It can take domestic stimulus measures, but obviously it's a real headwind, the international economic situation.
However, data in May has shown some good signs. The Purchasing Managers' Index, or PMI, for China's manufacturing sector came in at 49.6, and for the non-manufacturing sector it was 47.8, both close to the 50-point mark. A reading above 50 indicates expansion, and a reading below 50, contraction. The government has also unveiled a 33-point plan to boost the economy.
Mostly these measures consist of fiscal support, things like tax refunds, tax cuts, and also we know that there are also Social Security contribution deferrals, and so on and so forth. So on this fiscal front, the government is trying to, help businesses to reduce their burdens, right? And hopefully they will be able to, stay afloat. And then there are also on the monetary easing side that the central bank is directing banks to extend concessionary loans to small and medium-sized companies, to have the relending programs. And by the way, the government is also trying to support the very hard-hit aviation industry. But most of these come from support to the businesses, and a lot of it is coming from the monetary side, right? To lend, to relend, and so on. So I do think more can be done.
In a massive video conference with senior officials last month, Premier Li Keqiang warned that China's economy is at a critical point for meeting the annual growth target. And Chinese commentaries mentioned the word stability, primarily economic stability, several times.
I think I would call for the government to, for example, subsidize payroll for medium, small-sized enterprises. This would not only help the businesses, right, that they could retain their workforce, but it also helps the employees, the workers themselves. I would also argue that there should be more, for example, cash assistance. Consumer coupons would be helpful, but many people are still needing the cash to pay rent, to pay utilities, and so on. So I think some cash handouts would be very helpful, and that would translate into demand for the economy. And finally, I think, a lot of the local governments now are really strapped, lack of cash, lack of fiscal revenues. And I know that the central government has now doing the third time of fiscal transfer from the central to the local government, which is great. But I think the local governments would still need more.
The government has also signaled that it would continue to support the digital economy. At a meeting convened by China's top political consultative body, Vice Premier Liu He said the government supports the development of digital economy companies and their public listings.
Well, I think the government is sending out signal one, it intends to try to meet its growth targets. That's very important because investment decisions have to be taken by companies. And they need to know what is the government intending to do, because they need to have a rough idea of how much the economy is going to grow. And then within that framework, China needs a balanced stimulus between consumption and investment. And digital investment is particularly important in the present period because it's not merely affecting e-commerce and internet and other things like that, but the digital economy now is a crucial part of almost every part of manufacturing. So therefore, the development of the digital economy extends across the whole economy.
Although the technology industry has been China's biggest growth driver in the past decade, the country is now reorienting its economy from consumer internet technology back to manufacturing. In the 14th five-year plan published last year, the government emphasized the importance of hard tech, or areas such as artificial intelligence, semiconductors, and big data processing.
I think this is very logical because manufacturing is the area in which you have the most certain productivity growth. The service sector covers a multitude of things, some of which have extremely high productivity and some of which have extremely low productivity. And if you look at the development of most economies, they start off obviously raw materials and low value-added manufacturing, and they go into higher value manufacturing. And really economies which have grown fast, or major economies which have grown fast.
Xi Jinping himself has talked about that the core industries in the digital economy need to be strengthened. They're hoping to promote the share of these core industries in the digital economy. The output to GDP ratio is expected to reach 10% in 2025, up from about 7.8% in 2020. So consumer tech or sort of consumer finance, I think are still very important, right? As we try to boost digital economy, as we try to boost consumption share of the GDP. So I think these sectors are still important and need to be prioritized, need to be supported.
With the pandemic now under control, major cities like Beijing and Shanghai have loosened restrictions and are returning to normal. It's still too early to say when a full economic recovery will be achieved, but there is anticipation that it will come sooner or later.